Have you ever noticed that in different videos about Bitcoin, Litecoin, or Ether, over time you'll find that the price for these cryptocurrencies has changed. Sometimes you might see Bitcoin quoted at even under $1,000. It might be at $5,000, maybe $11,000, maybe close to $20,000, and it changes depending on the time. Now, that's because Bitcoin is highly volatile. What that means is that the price fluctuates. It goes up, it goes down, and what determines that is the market. What is the market willing to pay for a Bitcoin? This is really, really important for you to understand. So we will now take a trip down memory lane and look at the history of Bitcoin so you understand exactly what I mean about the value of Bitcoin and cryptocurrencies over time. To do that, I'm going to focus specifically on Bitcoin so you understand the big concept. What you're seeing right now is actually the market price of Bitcoin over time. This is actually a website called blocksEDU, and it actually gives you a chart where you can actually see the history of the price of Bitcoin over time. You see how it actually rises. This was the meteoric rise that we had towards the end of 2017, which hit almost $20,000, and then we actually have the drop. And we eventually got into what was many people regarded as a crypto winter as things went down and the bears took over. Now you see here that there's been a rise again in 2019, and we're seeing ups and downs. So throughout time, you see that the price of Bitcoin has fluctuated. Sometimes it goes up, sometimes it goes down, then it comes back up, then it comes back down, etc. Now the reason why I want to tell you this is that when you own Bitcoins, what's really relevant to you is when do you actually sell those Bitcoins? So what you really want is to acquire Bitcoin at a low price and then sell Bitcoins at a high price. Now throughout this time, you're actually holding your Bitcoins unless you trade them or you sell them or you do anything or use them to buy a product, etc. I want to tell you why this is relevant. I'm going to go back to one of the most important transactions in the history of Bitcoin, which took place exactly on May 22nd, 2010. And in this specific transaction, there were 10,000 Bitcoins that were transferred over to one single Bitcoin address. This is what's known as Pizza Day. So May 22nd, every single year in Bitcoin, people celebrate Pizza Day. And what we're celebrating is this specific moment when an engineer called Laszlo Hanyecz actually took 10,000 Bitcoins, and he was hungry, and he offered somebody Bitcoins to be able to buy pizza. Well, he received somebody that actually sold him 2 pizzas for 10,000 Bitcoins. Therefore, he paid 10,000 Bitcoins. Therefore, when you really look at it, that was $25 worth of pizza. There were 10,000 Bitcoins. When you really do the calculations, that pegs the price of each of those Bitcoins to a quarter of a penny. That means that for every 4 Bitcoins that he spent in this one transaction, he specifically got 1 penny's worth of pizza. Now, this is important for you to know because Laszlo could have held on to all those Bitcoins. If that were the case today, calculating that a Bitcoin at the price of where I'm recording this specific video is at over $10,300, then you specifically see that was a lot of millions of dollars worth of Bitcoin that he gave up to be able to get those pizzas. But he didn't give them up. He was hungry. And at the time, Bitcoin really didn't have any value, so he made the sale. Now, many people think that the gentleman on the other side that actually got those 10,000 Bitcoins is rolling in money and made a lot of money. Well, that's not necessarily true, and I know exactly because this person is known as Jerko. And Jerko actually took those 10,000 Bitcoins and he sold them for $400. So when you really think it through, in his world, it was a great deal because he only spent $25 for 2 pizzas and he got rid of those Bitcoins for $400. He banked. At the time, it was a great deal. But, you know, when you really look historically over time, then really he might have been better off holding on to all those Bitcoins. But hindsight is 20/20. What I want you to know is that when you have Bitcoins, you really don't execute the price of that Bitcoin unless you actually sell it or trade it or spend it on something. I want you to know that because over time, if you've looked at my different videos, you may have seen that I post videos and the price of Bitcoin has been all over the place. Sometimes, as you can see, the price of Bitcoin was in the $1,000+. Sometimes it was under $1,000. Then you see that it goes up to $11,000. Then it goes down, etc. It's been fluctuating because over time, the price of Bitcoin has changed. Now, the interesting thing is that I've posted over time and I've talked about the fact that, you know, at one point Bitcoin actually passed the price of 1 Bitcoin for an ounce of gold. And that's long gone. We definitely have a Bitcoin worth far more than an ounce of gold. But at the time, it was a big deal.
I actually was talking about how historically important it was that a Bitcoin was worth more than an ounce of gold. But I'll take you to a different perspective on my life. So I use Bitcoin quite a bit, and I actually get paid in Bitcoins, and then I have a choice. I can hold on to my Bitcoins, but the truth is many people still don't accept Bitcoins. Therefore, I have to use my Bitcoins when I'm paying for things. So I'll give you one example of these. This is actually a tube of caulk that I actually bought on April 2nd, 2017, and I actually bought it and I paid using Bitcoin. Now, at the time, that tube was worth around $4.98 worth of Bitcoin. When you do the calculations of how much in Bitcoin I paid compared to what that tube of worth is really worth, I paid hundreds of dollars for that tube. Why? Because I paid in Bitcoin. If I would have paid in dollars, then I wouldn't have had that problem. That being said, I had Bitcoins and I needed to buy things, therefore I had to spend my Bitcoins. So I want you to take out as a lesson from this that when you're receiving Bitcoins, you have to look at Bitcoins as two things. One of them is an asset you can invest in, much like buying gold or silver. You hold on to it, right? You don't pay for things in gold, you hold on to it. And another one is as a currency that you can use to pay for things. And I know many people that actually pay. I have friends that live in Japan, in Tokyo, where Bitcoin is actually a legal form of payment. And he just basically lives on Bitcoin and he pays for things primarily using Bitcoin. So in his world, he gets paid in Bitcoins and he pays in Bitcoins because it's very, very convenient. Now, one thing that I'm going to end this video with is the fact that just like there are other mechanism that you can actually leverage the value of the Bitcoins that you have, there are ways that you can actually get a loan against your crypto. And many of the Bitcoin miners, as the price of Bitcoin plummeted, many miners were actually losing money because it's very expensive to be able to keep running all these mining machines. And if the price of Bitcoin was too low, then you really don't have enough earnings from your Bitcoins to be able to pay for the electricity, maintain all the equipment, pay for rents, etc. So what they were doing is specifically taking loans against these types of assets. And there are companies that do this. For example, Salt Lending will let you take loans that are collateral backed by your crypto assets. Specifically, they let you take loans against your Bitcoin, against your Litecoin. You can take loans against other types such as Dogecoin, Ether. So there's many different ways that you can use your crypto assets and take a loan against them so you actually have dollars. And what that means is that you're not really selling your Bitcoins, you're actually just letting them hold it as collateral against a loan that you're paying. And you pay interest on that loan, but it's a way for you to retain your cryptocurrency if you don't want to sell it. Another one of these is actually BlockFi, and there are others. But the key point I want you to understand from this is that when you are holding cryptocurrencies, when you sell your cryptocurrency is the price that you actually get for it, because it's very, very volatile. So if you have Bitcoins that you bought at under $1,000 and you sell those Bitcoins at $10,000, you made 10 times your money. Now understand also that depending on the jurisdiction of where you're living, you'll have to pay taxes on the fact that you made an earning. Just like if you buy a stock and the stock goes up dramatically and you sell it, you actually have to pay taxes on the earnings that you got from that. And that's a subject for another video. I'm not a tax specialist, but I want you to be aware that when you actually buy cryptocurrencies and you sell them at a gain, you actually have to pay taxes on that. Now, the flip side is also true. If you actually buy cryptocurrencies and you sell them at a loss, you can take a loss against your taxes. So consult with your tax professional for these. So the key thing I want you to gain out of this whole entire lesson is the fact that Bitcoin price and cryptocurrencies in general fluctuate. And as you buy it, when you sell it is when you actually make an earning. You may be sitting on a lot of cryptocurrency, but if you're not selling it or spending it, you really don't have money. You're just sitting on collateral. You're sitting on cryptocurrencies, and these are assets that you own. Now, if you want, you can take a loan against that collateral. But if you actually sell it, you actually have to understand that sometimes you may sell at a gain, or sometimes you may sell at a loss. So I encourage you to keep track of the price of the different cryptocurrencies. There are multiple places where you can do so. One of the very good ones is actually CoinBillboard. CoinBillboard tracks the entire cryptocurrency market, and you can see as the prices go up and as the prices go down, and you can drill down on the graphs of how that performs.